Hello and welcome to the Impact Diaries powered by Liaison Group. My name is Victor Chumo and today's topic is about home ownership. Did you know that home ownership is a simple, straightforward process that you can start anytime? Well, to speak to us about this particular topic is Johnson Denge, who I'll allow to introduce himself. Karibu sana.
Thank you for having me here today. My name is Johnson Denge. I work at HFCB. I'm a seasoned realtor and currently in charge of affordable housing schemes. And I think we will be solving the homeownership equation. Quite a lot of things changing within the market, or generally in the real estate market. We see a lot of focus on return. People, investors always looking for a return, whether it's a yield or appreciation. We've seen a lot of focus on sustainability. So the market really responding to how is the development sustainable, the green aspect of it. We've seen a lot of also focus on technology, where we expect to see a lot of technology-assisted developments, even living in terms of how being more catalyzed by technology. We've also seen a lot of focus on specialized property, where people are coming up with industrial, the special economic zones, and the taxation rebates that comes with it, issues to do with data centers. And I think most of these things are coming in with the changing investment environment. One, you'll see that, for instance, people want to take advantage of the economic zones because of the tax rebate that comes with the financing, the innovative financing or structured or alternative financing that are then being able to be attracted within this property. Today's investor is just not looking at a house from brick and mortar, and that's where you see a lot of people looking for more liquid investment. The REITs, people looking for what will this maybe real estate yield or appreciate over time. We've seen a lot of sustainability, people being more conscious in terms of where I'm living, how am I impacting the planet, how am I impacting my neighbors' well-being. And I think those are just some of the few things that in today's real estate market are more shaping how we are investing.
Let me build up from the statement you've just made in terms of the changing real estate environment, especially when it comes to both the supply side and the demand side. I think we've all, we've had this adage that we are now in the generation that currently we are in. We are asset rich but cash poor, because I think our forefathers, the first thing they were told is, as you come into income, or rather as you start making money, the first thing you need to do is buy land, okay? And that trickled up to even corporates, where you're looking at huge investment house or corporate institutions, whether it's in banking or finance or insurance. Their biggest asset in their balance sheet were immovable assets, and mostly land. And the realization that came to most of the investors was that there's actually an opportunity cost to having these particular assets in our books. The illiquidity risk that comes with having them is higher than actually managing or structuring this particular asset to be more liquid. So you find that now the current let me say the current generation is trying to look at ways how can we liquefy these particular assets? And you've talked about REITs. And, when you have, there's so many now, the Kenya market is coming up with the different kind of REITs, specialized. The other day we saw a USD-linked REIT that was brought into the market. And you find that these are the particular changing environment that we are seeing with investors, that they are not only looking at land or property or housing as a cash-backed asset, but looking at ways, how can I access equity into this particular house? And you coming also from the banking side, you realize that even currently, banks, yes, title, when you go borrow, it's a good thing, but it's no longer the aim thing. The main thing is cash flows. How are you going to look at, how are your cash flows looking at? And it has now trickled down to now this particular element of buyers. And affordability right now, in my view, and the experience I've had with potential buyers into the market, people who are first-time homeowners, it is no longer a question of the size. It's not a longer a question of price per square meter. It's now a question of, can my current liquid status enable me to afford this house? If my disposable income available for housing is 40,000 shillings, 50,000 shillings, you'll find that the current buyers will rather even go outside the metropolis of most urban nodes just to be able to capture or to get that particular asset. And it's no longer a question of that this is a 3 million shilling house, therefore it's affordable to me because it's 3 million shillings. But it's a question of, this is a 3 million shillings house, requires me to pay me a certain amount. Is that affordable to me? And I think most buyers now are becoming more conscious and knowledgeable in terms of, how are my cash flows looking? Am I able to afford? They no longer look at just the asset value and say that I'm able to, because I'm looking forward to making this kind of money, therefore I'm able to afford. And I think that is the most important thing that the current property market is going. And what we need to be conscious about is that the buyer has access to a whole lot of information. There's a lot of information on the internet. You find that people talking on TikTok, Instagram, giving financial advice here and there on how to own property, how to screen for a property. And it's no longer about just, I want a 3-bedroom house. It's a question of, can I really afford based on my current affordability? And I think that's where we need to start really looking at in terms of the players in this particular industry.
I like the point that today's client is more a client. You look at individual needs, so that you're not looking at a client from a point of can you afford a 3 million? You could find the same property, same price, but now you customize your client and provide a solution depending on how much they're earning, depending on at what periodic periods do they get the money, so that you are making sure they are able to own. Today's client does not necessarily need to own brick and mortar. You then tell them, if you cannot participate in a whole, because real estate is capital intensive, if you cannot participate in a certain segment, let's say industrial or commercial, then you can come in through either fractional ownership or through REITs. And more recently, I think what is trending among the younger people is tokenization. So you find that people are coming in through tokenization, the blockchain way of ownership, what is called Protec, and being able to access real estate, not just locally, but globally. So I wouldn't agree more. And I think it is high time the market then moves to see, how do we segment these clients and be able to provide for them solutions that fit either their income band or their needs or their investment objectives. Real estate in Kenya especially, not largely maybe regulated. But there are steps, especially around policy and regulation, that have really enabled a typical buyer to be able to afford property or get property faster. One will be digitization. The digitization of land documentation under the Land Registration Act, where now a client through Sasa can easily lodge into a property, transfer is done now online. I think that has enabled a typical client, shortening the days that we used to see property being transferred to much more of even less than a week. The other aspect will be, when you look at the supply side, will be in terms of approvals. Most counties, authorities where you need to do approvals is now digital. So your typical consultants are able to put in documentation or your approval plans through the system, and it shortens also that period of being able to bring the product to market. And I think other areas would be the regulation that are agreeing to diversify investment vehicles. You look at the virtual asset regulation that were just passed the other day, that is enabling now people to be able to get to own or to access property. You look at the continuous changes in the REITs regulation, for instance. A good example would be, it will have been very hard to access a D-REIT a few years ago if you did not have 5 million. Today, with lobbying, you can now access a D-REIT unit at a minimum of 100,000. So that then provides access to buyers, especially in accessing real estate market.
Yeah, I think in terms of regulation, the good thing with the law and regulation is it is always ever evolving and changing, meeting the current market needs. And as you've rightfully put it, we have all these regulations that are coming in place. I think what initially was lacking to provide consumer protection, or let me say bridge the trust deficit that has been there, is the implementation of this particular regulation. And real estate is an ecosystem. It starts from the ground all the way to the end user, and each step, when you start with lands, you've said the Ardhi Sasa digitization has enabled transfer and putting up, ensuring that the titling is proper. All the way to the construction, we can see that when you look at, for example, the space of the affordable housing, with government providing the incentives or waiving some of the fees, some of the taxes, you find that when all these are being implemented and being brought into the market, at the end of the day, the product that comes to the consumer is, one, regulated, it is well protected, and the most important thing, it is affordable. So to me, I think it is a continuous process. We might not yet be there in terms of regulation, but as I say, you invest in efficiencies. As is, what we have is working and is providing at least a product. I mean, if it was not there, we will not be having all these skyscrapers around. But it's I think it's an ongoing engagement and a provision. At the end of the day, it is the consumer protection. And I really like, for example, what is there in the mortgage regulations. There's always that aspect of consumer protection, and we're now seeing the same thing with tenant purchase schemes, starting to gain traction in terms of regulatory framework and all that. But all of it is anchored to ensure that the consumer is protected, the product that the consumer is getting is well anchored in law. So I think, yeah, we are at a good point, or at a good starting point when it comes to regulations.
So there are about maybe 3 to 5 or 6 items that a typical buyer should really consider when buying. One would be the status of the title and the legal ownership. So it is important for a typical buyer to carry out either a normal search or a root search, just to find out how this land was alienated to get to the point of where it is, what is the status of the title. Titles can either be freehold or leasehold. So just to find out how many years are remaining on the leasehold, if it is a leasehold, which type of a title is it registered, is it under which regime of law. That will be important for a typical, and a search in Kenya is always done at the Ministry of Lands Registry. The other aspect that one needs to look at is to check the boundaries, the physical boundaries of a property. In physical boundaries of property, then you need to engage a surveyor, a licensed surveyor. There's a process where you can apply it to the land surveyor, the government land surveyor, and it is verified structurally, just to make sure that whether you are dealing with a general boundary property or are you dealing with a general boundary property. And once beacons are verified, you are able to be given a boundaries certificate, or a beacon certificate, just to know then you are buying something that exists. The third one would be to check on zoning regulation. So in most cases, under the Urban and Land Use Act, I think it's the 13 of 1999 or thereabout, or 1919, I think, or thereabout, it gives county government and national government authority to zone, especially urban areas, on what you can do on the land. So a typical buyer, you should be able to then get either a planner, a registered planner, to advise you or check on the local authority plan, just to know where I'm buying, what kind of development can I do. So am I allowed to do commercial? Because you can then buy somewhere where you're thinking to do commercial and the place is actually zoned residential, or it's a school. So it is important as a third aspect, for you to check on the planning and land use of the specific area you are buying. The third one would be for you to look at perhaps what I will call the environmental state of the property. Today we are very cautious on protecting the environment, so you don't want to go and buy a riparian. You don't want to go and buy a gazetted area for maybe a forest. So it's important also for you to engage the various authorities or professionals, just to check for you what is the environmental status of the land you are buying. And then the other aspects will be just perhaps to get to know the environment you are buying in terms of who is your neighbor, so that then you are able to go to one of the things I've learned over time is that sometimes small disputes, because the land could have encumbrances that you might not have detected. The land could have a dispute with the family, depending on how the ownership is. So one of the things is just also to show up to the land and just hear what neighbors are saying. So if there was a court case that is attached to it that is not necessarily registered on the land at the registry, then you are able to get.
Yeah, I think I've liked what you've said. You know, there's a statement that they say, when you want to buy land, you need to get a lawyer, a surveyor, and a local drunk. And of course, when you have the local drunk, you need to have money, because they usually have this information. You know, you tell them, I want to buy this particular property from this particular family. They'll tell you, now that one, you are the 7th buyer when you are coming to this particular property. And when also you are buying, I like the fact that you're saying, most people just look at the aesthetics. You know, you're being sold from on the internet, or you know, you're too busy. You know, you send a proxy to go. Someone once told me, if you're going to buy a house, this is an asset that you're going to stay with it for a very long time. it's essentially going to be part of you for a very long time. It's almost akin to marriage. If you're going to buy a house in a certain area, okay, they say you need to take a walk or a drive 9 a.m. in the morning, around lunchtime, between lunchtime and 3 p.m., and in the evening. Because they say and at 9 a.m., you'll be able to know that if the kind of neighbors that you have, if you walk and in their driveways you still have people, their cars parked or people are still around, you can clearly see probably you are in an area where the people are retired or they don't go to work or that kind of thing. During lunchtime is when you know that is the low peak. You're able to have a very clear view of that particular area because there are very few people there. You're able to identify things that rather when you come during high peak time, you are not able to see. And then in the evening is because most of the time, you're told, you have parking for everybody. Now in the evening, everybody is back home. You'll be able to know really even the parking that is available for visitors. Sometimes you'll see people double parking and whatnot. And you can be able to ascertain, it might be 20 houses, but in each house probably there are 2 or 3 people in cars, or other houses, there are multiple families living inside. And when you have such kind of things, the density and the population and whatnot, so it's something, a decision that you can be able to make and see, is it something that I'm unable to do. So I think the critical component of customer due diligence is physical visit. You need to be there. You need to go and feel the property. Don't look at the aesthetics. Don't look at the outside. You need also to probably do the research on who was the contractor, who was the architect that did this particular. What is their track record? The good thing now with the advent of social media, if there's a building somewhere that is not structurally okay, even before the main media announces, you can be able to see, and it can outline for you who are the people behind it, so that you're able to make a proper decision in terms of getting these assets or this home that is going to be part of you for a very long time.
And I think what I've seen as a biggest challenge is for diaspora clients, because then you are not able to visit. But what I advise is then be able to use a licensed broker, a licensed estate agent, who is then able to do for you these things, so that you are not somewhere in diaspora and you come and find all these challenges where you are perhaps you bought a house with 2 parking and you find that you have none.
The checklist will never really end, but they are the main, they are the critical things that, of course, you need to look at in a house. Usually I say first you start with your own checklist. What kind of a home are you looking at? Of course, and you also look at the affordability, because you do not want to go into a home that 2 or 3 months down the line you are unable to service or pay for that particular home. But to me, the most important thing, maybe just to reiterate the initial comment, is on the structural the structural capacity or features of this particular home. If it's a standalone home, okay, you need to look at are there any, were all the required civil engineering rules covered? If it is for example, if it is an apartment building, is the density ratios being observed? Do we have enough parking and all that? So I think, to me, those are the preliminary things that we need to look at when it comes to just looking at a home to buy.
The mortgage landscape in Kenya is progressing, and it's progressing because we've been able to do a few things that are able to improve access to mortgage, especially for end users. One would be because the challenges has been the cost of the mortgage, the challenge has been issues to do with how can access, because the informal people are not being able to access. But I've seen a bit of progress, especially where KMRC or Kenya Mortgage Financing. Today, I think they've refinanced up to about 5,000 mortgages. They come in with longer terms. They come in with what I would call a fixed rate of interest and single-digit interest. And this has really improved access to mortgages by both formal and informal people in the society. There has been improvement on mortgages, especially with government investment in affordable housing. Government today, although they offer it as a tenant purchase, they offer as low as 3% interest rates for a period of about 30 years. All the way to maybe 9 as maximum, which is fixed for a period of about 30 years. And this has given access to a lot of buyers, and they are also playing, because previously we only were supplying about 50,000 units into this market, of which only 2% were done for the low end of segment of the market. Today, affordable housing program is doing in excess of 200,000 units in different stages of construction, that will now even allow more Kenyans, and especially those on the lower side of the pyramid economically, are able to access. The other aspect that I will say is really changing the way mortgage uptake is being taken is the various systems that have come out, so that we are not just looking at mortgage from a point of your traditional conventional mortgage. We now have other rent-to-own models that are also having these people access cheaper or affordable house. We also have people, circles, or people doing what we call incremental development. Banks are also offering financing in stages, so that you can now just get a house and then maybe construct later. And I think these will improve our mortgage, which for so long was stuck at around just 30,000 mortgages in the country. And in few years, we should be able to see that traction increasing.
You know, the old traditional way of financing homes, as we had been stuck to the saying that it's either the bank or you bust. But I think even the banking institution is trying to innovate around the issue of mortgages, because when you look at mortgages, in essence, it's not really bad. It's just the perception that has been built over time on the angle of what mortgage is. It's similar to what most of Kenyans view insurance as. You know, it's like I'm going to get insured, but chances of me being sorted when anything happens is neither here nor there. But it's not the case, and therefore the market in its element has diversified and looked at what are the options, because buyers are now asking, okay, what are the options we can do? And as you rightfully said, SACCOs have come in and they've played a big role, where they're offering, they're calling it home construction finance, where a buyer actually takes up sort of like a personal financing or a personal loan to go and do construction. But you know, there's always disadvantages with sometimes this kind of build by yourself kind of options, is because the real estate market is quite murky. You know, you need you're doing an 8 to 5 job, and somewhere in Kamulu or Kitengela, a fundi is building for you. You'll end up borrowing more okay, and paying even more because it's usually the normal adage. So there's that aspect of people trying to do it on their own, and of course there's the element of, as you said, the rent to own, the tenant purchase schemes. It has been tried. I think you can say tested. We've seen the National Social Security Fund did their first TPS program from 1998 or thereabout, and it was successful. So I think as time goes by, we are going to see more and more options of funding a home from the normal traditional mortgage. And to me, it will not only strengthen that financing a home is a long-term play, that it will also bring back now the aspect that even a mortgage in its own is actually a good play that each and every one of us can be able to partake. Yeah. I usually have this analogy, and I apply it to myself, that as an individual, you should also treat yourself the same way an investment bank treats its asset portfolios. You need to look at your liquidity needs, and you need to look at your liquidity availability, not only in the short term, but also in the long run. What am I trying to say? Is that you cannot finance a long-term asset with a short-term liquidity play. You cannot look at financing an asset for 30 years and you look just at 2 years. You need to look at all these particular factor. Number one is, what is your current liquidity? Number two, what are your projections? Okay, if you are employed, how are you looking into the future in terms of your income, in terms of your salary? And number three, what are these other things that will come on board? Okay, in a company they say expansion. Okay, there will be an element of capital expenditure. So what are these other things that will come that might also try and eat on your liquidity, so that you can clearly project and say, if I want to get a home, okay, this is my affordability rate. Now, for banks, you're able to give mortgage on a floating rate. Okay, for when it comes to a fixed rate, you can always have the option of exchanging, or rather upgrading. Okay, where you're looking at and saying, this is where I can be able to start. Okay, in the next 5 years, this is where I want to go. But ultimately, there's a point where now you say you've plateaued, and you're saying, this is where now my ultimate home. Because if you're a young professional, or you've just started life, of course, I don't expect you to go and buy a 5-bedroom house, even if you can afford it, isn't it? What are you going to do with those rooms? Chances are it will start probably with a 1-bedroom or a studio, and then you get married, you add another. So it's a process that continues, but that process has to be guided. You have to look at yourself like a balance sheet, okay, and your income matching with your expenses. You have your own P&L and your own balance sheet, so that you are now able to know that when you're putting this particular asset, a home, into your balance sheet, or let me call it, because it's a home you're paying for, it's like a liability, because it's cash outflow. It's a capex, it's a capital expenditure, isn't it? With time, however, you're building in equity into that particular asset, and you can be able to exit. Because we never look, unfortunately, especially these developing countries, unlike the developed world, where you're also looking at your home as a potential for equity release into the future. Most of the time, we know that this is just a home, and when things get worse is when you take the title to a bank and tell them, give me a small loan, and then things go haywire, you lose your home. Okay, but you need to find a way of looking at that particular component. So to me, that is the main thing that each individual should be able to look at. And the beautiful thing is you have access to that particular information.
And I think it boils back to especially what he's saying about financial literacy. And perhaps thank you for this platform, because then you are able to shed some light around this. Because it will, as he said, it will just get back to your typical investment profile. What is the investment horizon? What is your age, for instance? What are your objective? Location, where do you want to buy? And as he says, is that I've also seen a lot of development around the same, in terms of even developers responding to how they design. A good example is Nyayo Estate, where it is designed that even if you are young, you can actually buy a 2-bedroom, but then you have a way of making extra income by just locking a door, and you can rent part of it. I've seen in other markets like Ghana, where you will start with a house, but there's a provision for you to extend in future, and it's covered under the mortgage, so that you can extend in future, or maybe build what they call boys extension. So they expect that maybe you are buying when the kids are very young, a 2-bedroom, but then you have an option to extend structurally within the system with approvals for the same. So I will agree more with you, because then it depends on what is your state at that period. And I think typical providers of financing are increasingly looking at this, segmenting the client and tailoring a solution for each and every client.
You know, it's interesting that we've been talking about tenant purchase scheme. I think the buyer today, or rather the home ownership, they're looking at rent not to survive, but they're looking at rent to thrive. And they're asking themselves, I live in an urban area, I work and I stay in an urban area for 30 years. That has been the trend. You come from the village, you get a job, Nairobi, Nakuru, Eldoret, whichever city, and you happen to live there for 30 years. Now, someone sat down and looked at the rent they're going to pay for those 30 years. And remember, the upgrade is always there. You start with a bed studio, you go to a 1-bedroom, you go to a 3-bedroom, probably settle on a 4 or 5-bedroom. So when someone looked at that particular rent and said, over these 30 years, I have paid so much in rent. If I do the PV of this particular rent, I could have afforded a house of 5 million comfortably. But the problem is always fear. Okay? With rent, if anything goes, I don't have a title, I'm just kicked out and I go. But now with ownership, you have the title and everything. Okay? But you forget, the way you said, there's less consumer education, that in terms of ownership, there's actually a protection you have. It is very hard for you to just be kicked out. There has to be a demonstrated ability by your lender that you actually are now completely incapable. Okay? And what I've seen with that, also the TPS that is in the market, it's also becoming a bit flexible to assist buyers when they are a bit constrained. Instead of allowing a buyer to go into delinquency and taking that particular title away, then it is enabling them to, quote unquote, step aside, okay, have that asset being occupied by someone else, so that it can be able to generate the same yield to be able to pay off the lenders. And then once you stabilize, then you can come back. And I think that's why now the conversation of the TPS and rent to own is becoming a very strong discussion point. Is over and above me having that flexibility, is that I'm able to still live within my means, still live within. It's just I'm transferring my rent now to part ownership. You're saying probably for the first 5 years is to pay the principal and then start paying the interest, or it is structured in a good way. And secondly, is that like one of the products we are trying to put into the market, we are working on, is that we are putting a structure or a mechanism of gradual increment, just to mirror your rent. You're saying if you're living in this house, if it is assumed it is a rental, most of the landlords increase your rent for probably between 3 to 5 years. So just use the same thing. So you're not changing your lifestyle, you're not changing anything, you're just applying the same thing. In the event that you outlive that house, you can either retain it as an investment, okay? Someone else comes and lives, and then you start another program with another house, as a bigger house. You get. So it's a way also, the rent to own has become a way of investing. People are now putting in money knowing that with time, I'll start with a smaller house, but I don't really need to offset this small house when I move to a larger house. I can actually let it run on its own, and it becomes now an asset to me because it earns me income at the end of the day. And I think that's why now the conversation of tenant purchase scheme and rent to own has really picked traction. And we're also looking at speaking from experience of us. We've had technical support from DFIs who are coming in and telling us, look, we like what you're doing. We want to support you. We want to see how this is going to be. We want to come in at the technical aspect. We want to come in at the funding aspect, okay, to be able to give this particular buyers this particular unit. So hopefully by end of the year, we are able to bring in something to the market that is linked to a TPS that everybody can participate in, and I think also spread this particular word to the market that this is actually something that can be done.
Tenant purchases may be picking up traction now because of the government initiative around tenant purchase. But when you look at it, National Housing Corporation has done more than 37 projects in tenant purchase, with actually over 9,000 units in this market given under tenant purchase. A good example will be Nyayo Estate Embakasi, which done not by National Housing but by NSSF, which was a tenant purchase for 20 years, and it should be already done because it was done in 2000. So it has already moved through the whole system and gone and matured, and people are perhaps being given titles. So when you look at perhaps liquidity and your needs at given time, tenant purchase is coming in to provide flexibility. It is, for instance, just removing some costs. If you look at a typical mortgage, then you need another 5 to 10% legal fees, charging fees in terms of when you charge the title. In tenant purchase, you do not transfer the title to the tenant immediately. So that is also saving in terms of the stamp duty that will have been paid. So the generally closing fees are able to be reduced, improving cash flow. One of the biggest challenges in conventional mortgage that was facing this market, and that depended on the type of client and perhaps how they make their liquidity, was people who are not banked or people who are in informal sector, people who do not have what I would call regular income. Tenant purchase is able to come in and sort that aspect of population, because then you can also be given opportunity to pay slowly. As the tenant purchase we are administering, for instance, we are, the government one, we are allowing tenants to pay daily, to pay weekly, to schedule bi-weekly, just to make sure that they are able then to get into what they have. And then I like what you say that you can also perhaps upgrade. One of the biggest advantage of the government program, you can restructure or upgrade or downgrade either into your income or upgrade into a higher income and also on the unit. And then the other aspect that I've seen helping a lot around rent to own and tenant purchase is a Sharia product. It actually comes in very well with our Muslim brothers in terms of avoiding riba. So you find that there's an asset backed and they are paying rent to own. I've actually seen products which coupled payment plan and then a rent to own, so that during construction period, which typically 2 to 3 years, one is able even to be put on a payment plan as they wait for their unit to come up, and then once it's done, they continue by doing a rent to own. And this does not just help flexibility around the end user owning, it also help the developer to also bring up this, when you look at the average cost of that financing, it then becomes more lower because they are able also to get some payments during development. So in the next 5 to 10 years, I see a lot of changes, and some of them just the maturity of some of items that or ideas that we are seeing today, or the changes we are seeing today. So I see a lot of changes in design, just looking at the physical aspect of it to accommodate the needs of a changing end user. COVID taught us that today when you do your design, home design, then you need an office. So I see a lot of that coming in. I see a lot of people doing or technology-based designs and people involving a lot of technology in their homes just to bring that aspect of convenience. I see a lot of the way our population is changing and the end user consumer. I see a lot of investment in mixed use, again for convenience, where you can achieve play, work, and live. So I think in the next 5 years you'll see a lot of that aspect to do with gated community that are controlled as people look for lifestyle, people look for security. There will be a lot of, in the next 5 to 10 years, there will be a lot of diversification from brick and mortar into tokenization and generally real estate solution that blockchain led. You'll see a lot of investment in REITs. I also see, as the market matures, a lot of specialization, where we will have a lot of purpose-built development. We've a few years down, no one had thought about having an entity that just focuses on student purpose-built accommodation. So we will see a lot of specialization in terms of even developers who are bringing out these projects. And I think in the next 5 to 10 years, my last foresight will be around the population as they get more financially aware, a lot of focus on what is it in for me, what is the return that I'm making from just not owning a home, but also as an investment.
As you've put it initially, people are looking in now home ownership as a lifestyle and as also a form of investment, or rather for return. So I think how to sum it up, or rather how I'll sum it up, is that people are now buying into an ecosystem. It's no longer a standalone kind of purchase where you're just looking at owning a home. No, it is now an ecosystem that this home that I'm buying, what is it going to do for me other than just providing a roof over my head? And I think that is where now we as the players in this particular industry or sector should actually now be looking at how do we, when we are selling, or rather when you are crafting a home ownership plan or a home, how does it speak to the wholesomeness of these buyers who we've said, in as much as there's need of some more of consumer education or enlightenment, is that they have a lot of information coming from different quarters that they can be able now to put it together to make sense. I think that's where the next couple of years, the home ownership angle is going to be when it comes to the buyers.
So I think the market is changing, and it does not necessarily matter where you are financially, where you are in terms of your investment journey. There is always a solution for you in the market. Just reach out, and you'll be able to be part of real estate ownership.
As they say, the best time to plant a tree was 10 years ago. The second best time is now. I usually say, try and put a Chinese wall between emotions and logic, because when you put emotions into purchase of long-term assets, it becomes a fear factor. You now put in what I like calling it a fear risk. You will never regret starting today and buying a home. And there are so many other products in the market, regulated, and you can always reach out to registered providers of this particular solution. And you need to start now. There's never a small amount. Whatever amount you have can always start you somewhere, because as I've said, when you look at eventually the PV of what you're going to be paying over time, you'll find yourself starting to regret that you should have done it. So the best time is to start now. Start with whichever amount you have, and I guarantee you that going into the future, it will be the best decision you'll ever make.